Good afternoon, committee. We will come to order. Thank you all for being here. We have a few items that we will go through. There are two bills that we will hear from the Senate that have come over after turnaround. And then initially, we will have a hearing relating to the roles that we can have in governance on investment decisions. There's been some question on that. And today we have called this hearing to have a chance to learn about what we can do looking at taxpayer dollars, how they might be deployed differently, how we make sure that we look at the investment interests of the state, as well as stand with our allies around the world, specifically as we look to stand with Ukraine in the fight against the Russian aggression that we have. Our actions and our amounts may be relatively small in that, but we want to make sure that we vet that thoroughly and look at our obligation to make sure that we prevent any furtherance of international interests that are not in our best interest. So with that, we'll take a few moments to learn a little bit about what we have in KPERS, and we are fortunate to have someone that might be able to shed a little light on what's going on around the world and in the part of the world that we are particularly concerned about, joining via WebEx. And I'm going to ask that you do a great job of introducing yourself because I will do a poor job. But we have Sergey Alexashenko, who has a number of roles that he is playing currently, has a number of experiences from the past, including being a former Deputy Minister of Finance in Russia. Welcome to committee, and if you would please correct my pronunciation and give us a little more background as well as any other information you might share with us.
Sashenka, you pronounce perfectly well my last name, and I have a great experience in Russia. I spent 10 years in the government, starting from the government of the USSR. Then I was the Deputy Minister of Finance of Russia and the Deputy Chairman of the Central Bank of Russia. After that, I spent 10 years in Russian and international big business, being member of the boards of different huge Russian corporations, including Sberbank, VTB, Norilsk Nickel, and some others. And in 2006, 2008, I was chairman and CEO of Merrill Lynch Russia. After that, I spent 10 years in academia, and in 2014, after Russia annexed Crimea, I left my country, and since then I live in the United States, currently in Washington, D.C.
So thank you and welcome to committee. And we are looking forward to thoughts that you have for us relating to impacts of investments of places like Kansas and Russia, how we might think of that in our interest, how we might move forward and think about those risks and how we support efforts around the world.
Okay, thank you, Chairman Johnson, for this opportunity. And I would like to share my view on what's a short introduction of what happened in Russia in recent 20 years, because otherwise it will be very difficult to understand why we are at this very crucial point and painful point in the human history. In 1991, Russia has begun its transformation from the communist society, and the whole world believed that Russia would become a democratic country, an active participant in the global world. Reforms in the 90s were very complex but consistent. Russia was building a new state based on federalism and republican principles. Russia made a market economy. Russia joined the Western political structures of G7 and NATO. At the end of 1999, when Russia steadily emerged from the deep economic crisis of 98, President Boris Yeltsin decided to resign and to replace himself by the former KGB officer Vladimir Putin. Putin paid lip service to Yeltsin's course. Still in practice from his first days, he began to fight against freedom of speech, the independence of regions and the independence of the parliament, the independence of judiciary system, and destructing the system of property rights. In the first months of his presidency, he destroyed one of the most popular Russian news media, Most, and in the end of August of 2000, he implemented a very tough state control over the biggest Russian national TV channel, ORT. Many did not pay attention to what Putin did in this time, because Russian economy grew rapidly, relying on rising oil price and inflows of Western capital. Returns on investment in Russian assets were so high, and many investors preferred not to turn a blind eye to what was happening inside Russia. In August 2008, Putin started a war in Georgia, and Western world did not react. In February 2014, Putin initiated annexation of Crimean Peninsula belonging to Ukraine, and the West responded with mild personal sanctions. In April 2014, Putin sanctioned the use of Russian fighters in the eastern Ukraine to split the country in two, resulting in a bloody conflict that claimed 15,000 lives. Western sanctions became severe only after Putin's military shut down Malaysian Boeing MH17. But this did not stop investors, who continued to put their money into Russia by buying government bonds and shares of state-controlled companies. In autumn 2015, Putin sent his troops to Syria, where Russian militaries used the most sophisticated weapons trained in practice to use Russian troops. And they made some very tough military experience destroying Syrian cities and killing thousands and if not hundreds of thousands of civilians. And still, the West did not pay attention, and Western foreign investors continued to invest in Russia. In February 24 this year, Putin decided to invade of Ukraine, and we are currently in the middle of the bloodiest conflict, military conflict in Europe since the Second World War. And he's using his Syrian tactic of destroying big cities, and we see numerous casualties of Ukrainian civilians and militaries. He destroys kindergartens, he destroys schools, he destroys hospitals. And this is, we should emphasize that all of this was done due to Putin was able to use money received from the West. Western investors gave money to state-controlled corporations. They were able to drill more oil, to export oil, and Putin used these proceeds to build new weapons. Putin is a person who built a dictatorship in Russia, who destroyed all checks and balances, who consolidated all power in the country. And nowadays he is destroying the independent country, Ukraine, which tries to go independent way to build a freedom and democratic society. And it is a very tough point in the life of the civilized world. And of course, we are on the edge of destroying all economic relations with Russia. The sanctions imposed on Russia by the United States, by the European Union, by Great Britain and allies in the recent week, in fact, isolated Russian economy. In fact, isolated Russian financial system. But that does not solve the problem of what to do with investment that were done before. Russia used a very tough approach, and at the moment the central bank blocked all sales of assets owned by non-residents, which they own in Russia, and that's why no foreign investor can sell its stocks and bonds in Russia and can receive any proceeds. Russia prohibited any transfer of coupons and dividends to foreign investors. Russia prohibited any transfer of foreign exchange of any payments to international banks from Russia, despite is it resident or non-resident. So Russia is isolating itself financially and does not allow foreigners and does not allow Russian citizens to use their property rights. We should understand that at the moment, Russia is fully isolated from the civilized world and does not allow anyone to use its property in Russia and to liquidate its investor. From the recent days, we see that the price of the stock of the major Russian corporations on the London Stock Exchange fell to zero, and still there is no demand. Nobody wants to purchase these assets. I don't see any significant way that at the moment Kansas pension system can leave Russia. I'm afraid that the bulk of Russian assets are non-liquid at the moment, and maybe they have no price or they have very low price. I have to say that many international corporations, huge international corporations, decided to liquidate their investment despite of the losses they may have. For example, oil company BP said that it will dispose its 20% stake in state-controlled oil company Rosneft. French Total said that it will not participate in any new gas project. Shell left the very lucrative Sakhalin gas project, and so on. So there is a very painful decision in front of you to accept losses and to leave Russia forever, and not to invest to Russia anymore while Vladimir Putin is in power. And then maybe the last phrase is that Putin is not the only one dictating the world. There are many other countries, and you should be very prudent making decisions to give your money to such regimes. You should understand that sooner or later you may lose all your money. Thank you. Thank you for this opportunity, Chairman Johnson.
Thank you for taking time to join us. And if you may take questions, if some of the committee members have them, we would do that at this time.
Yes, of course.
Yes. Are there questions, committee? So, Representative Smith.
If I could ask Mr. Conroy, do we have money invested there now? Okay, we got a little bit, and they were saying on the news the ruble is going to nothing or going way down. So if we drop out of there, will we lose most of what we invested? Does that make any sense?
I'm afraid that you cannot sell anything at the moment. So
Right.
no one foreign investor can sell anything in Russia and cannot repatriate profits. So if your money are invested in Russian market, they're frozen for an unknown period of time, for uncertainty.
Even if you went out, you're not getting out. So is that correct?
Yes, correct. You cannot get out.
Thank you. Thank you very much. Thank you, Mr. Chair.
Representative Riley, did you have a question?
Thank you, Mr. Chair. So my question has to do with, are most of the United States companies like our retirement plan, have they been investing in the bond market of Russia or the stock ownership of companies in Russia?
U.S. companies invested both in stocks and in bonds. It depends on investment strategy, on risk acceptance, on risk ratio. So there we can find American investors both in stock and bond markets, both in rubles in domestic market and in Eurobond and dollar market.
Okay, so thank you. So we'll probably need to ask those kind of questions of where is it 38 million? Where we've invested that at. Okay, thank you.
Thank you.
Representative Proctor.
Thank you, Mr. Chair. Thank you, sir, for being here to testify today. It's been very informative. If the Russian economy is isolating itself from the world itself, what impact do you think that these sanctions that the U.S. government and our international partners have imposed, what effect do you think it can have on Russia if they've already isolated their own economy of their own will?
I anticipate the devastating effect of the sanctions because they are comprehensive and Russia is strongly dependent on the international economy, on the globalized world. For example, Russia does not produce its own planes, and 80% of planes in Russia, they are produced by Airbus and Boeing. And both Airbus and Boeing, they announced that they will not supply parts, they will not supply new planes, and then they will not provide technical assistance for supporting planes that are in Russia. The companies Pratt & Rolls-Royce and the CFM that produce engines for those planes, they said that they recall their technical service and technical support for those planes. And that means that Russia has a choice either to nationalize those planes, that was discussed today in the Russian Ministry of Transportation, and to use the tactics that was used by Iran to use these planes without following any technical norms or regulations, just stolen airplanes that will fly only in Russia. or Russia should put all those planes on the ground or return them to the leasing companies. So that means that Russia will not have any aviation transportation after that. So, for example, today, the freight company that transporting containers to Russian ports and from Russia, they announced that about the comprehensive blockade, and they do not supply containers. They do not deliver containers to Russia, and then they do not pick containers in Russian ports. That means that Russia will lose all import that is going to this country. We have to remember that Russia is not an independent country in technology. Since Tsarist Russia, since 19th century, Russia, the Soviet Union, Russia again, was importing technologies, sophisticated technologies for its machinery building, for its chemical industry, even sometimes for military industries from Germany, from the United States, from France. Even in oil and gas fields, where Russia is the most strong country in the world, one of the biggest producers of hydrocarbons, Russia is importing technology, and it cannot produce LNG technology itself. It purchases technology from Italy. So if all those sanctions will be enacted, that means Russian economic potential will be undermined, and the Russian economy will grow with minimal rate, if any.
Representative Riley.
Thank you, Mr. Chair. So follow-up question to that, and I think you almost answered that question. So regardless of whether we pull our money out of Russia, just as a political statement, even though it's worth nothing, isn't the back story on that the Russians would just basically nationalize those industries that we've invested in?
I would not be surprised if Putin's government will nationalize some of the companies, because in his 20 years in power, his government nationalized the biggest oil company, biggest media company. So it's not a surprise that Putin can do it.
So, thank you. Follow-up question on that is, and I'm not sure whether you have that information or not. So what is the current status, let's say in the last 3 or 4 years, of Russia's economy in the manufacturing, that's not what I want to say, in the steel manufacturing business, and how has their mining industry been in the last 3 years, as far as have they been having to import their steel? Have they been having to import their raw materials?
Unfortunately, not Representative Riley. Russia is self-reliant, self-sufficient in bulk of the natural resources, and Russia is one of the biggest producers of natural resources to the world. Russia is exporting oil, gas, petrochemicals, ferrous, non-ferrous metals, precious metals, wood, pulp, grain, and in particular in steel, Russia has 4 major companies that are one of the active exporters of steel to European, Asian, and American markets. So Russia does not import iron ore, and Russia does not import steel, maybe some specific types in minimal amounts. For example, until recently it imported some types of steel from Ukraine. But dominantly, the bulk of the steel is produced in Russia, and Russia is self-sufficient, not dependent on import.
Representative Dodson.
Well, thank you very much for coming today and providing this information. Mine is maybe a little bit off topic, but I'm a bit always concerned about leakage through sanctions. And I know that Russia is an exporter of oil, and the country that consumes most of that oil is China. So do you expect that to continue, and do you expect there to be leakage on other areas, like through Iran, for example, where you can push things across the border pretty easily?
Luckily not, Representative Johnson. It's a mistake. First of all, China is not the major importer of Russian oil. The bulk of Russian oil goes to Europe. Something like 45% of Russian oil goes to Europe, and approximately 20% goes to China. The biggest constraint on transferring Russian oil to China is that, unlike Iran, which exports oil by sea, Russia exports bulk of its oil by pipelines. And Russian pipeline, major pipeline, goes to Europe, and you cannot turn pipeline that is, I don't know, 4,000 or 5,000 kilometers other direction. The pipeline one of the pipelines goes to China, but it has limited capacity and it is fully loaded. So you cannot transport more oil to China via these pipelines. And Russia has two seaports, one in the Black Sea and another in the Baltic Sea, that can transfer oil to tankers and sell it to the whole world. But both of those ports, they are fully loaded, they have no spare capacities. So if European companies will block somehow, I don't know, I do not believe that it's very viable, but if European companies will reduce purchase of Russian oil going by pipeline, Russia will not be delivered this oil to China or to any other country at all.
Thank you.
Interesting. Thank you for those questions, committee. The questions about oil, I think, are particularly pertinent to look at that, and thanks for the depth of the response on how that works. Thanks also for giving us the clarity that despite what we are wanting to consider on divestiture, the ability to affect that is limited, such that we would want to look at what we commit going forward and making sure that those commitments would not go to Russia or other places. And as the previous representative questioned about China, are there some other countries you might warn us to look at and be ready for the next issue and how we might best prepare?
It's a very difficult, complicated question because we cannot foresee political developments. But I would be more concerned with countries in Southeastern Asia, like Indonesia, Malaysia. Of course, Philippines are out of your radars. And I would be more cautious with countries in Central America and in Latin America.
So thank you. And certainly we want to continue to promote peace and trade around the world, and not wishing to get in the way of that, but looking for how we continue to plan this as best possible going forward. Committee, are there other questions that we have? Seeing none at the moment, thank you so much for joining us. As you joined, I think you were pronouncing the name and said that I did an adequate job, but would you restate it for my benefit as well as the committee's?
Sergei Alexashenko, but it's very difficult to pronounce. I know that. Virtually impossible. Mission impossible. Take it easy.
Well, Sergei, thank you for being with us. The final request I would have is if there is any of your testimony that we might have written or an outline that you could provide us, as we would appreciate being able to review that. And it was a wonderful overview of what we are facing. So I thank you for that.
Okay, I will deliver my written testimony to you. Thank you so much, Chairman Johnson. Thank you, members of the committee.
Thank you. Thank you for joining us today. Have a wonderful day. We'll look forward to staying in touch.
Thank you.
So thank you. Committee, thank you for your questions on that. We now will move to our informational piece from Director Conroy. I'm not sure which of those should have gone first, if we needed to have the background or if we needed to know a little bit about where we were to ask our Russian friend those questions. But Director Conroy, welcome back, the smartest person we have on the U.S. side. Welcome to committee and the overview of where we may be in capers.
Thank you, Mr. Chairman. No pressure there. Appreciate that. The chair had asked that we gathered some additional information on the capers portfolio exposure to Russia, and then some additional information on environmental, social, and governance, or ESG criteria in investing. So first on Russia, on the first page of my testimony, and there's a graphic there as of last Friday, so February 25th, The system held stocks in our international equity portfolio with a total market value just below $36 million, which in terms of the total trust fund of over $25 billion, that's 14 basis points, so that's 0.14%. So 0.1% of the total assets were held in some type of Russian investment. We do not own any Russian debt, so no sovereign debt or Russia government debt or any Russian corporate debt as well. And of course, we're continuing to monitor this. We're in our daily communications with our international equity managers of the situation, and of course, certainly watching to make sure the portfolio, of course, complies with any federal or U.S. sanctions against Russia. So about 12%, to give perspective there, and there's that pie chart there, so it shows you the big blue circle is that $25 billion portfolio, and then the sliver then is Russian securities, about $35.99 million. So approximately about 12% of the retirement system's international equity portfolio is currently invested in an indexed portfolio, and most of that Russian exposure then is held in the system's passive international equity portfolio, which is indexed. It's called the MSCI All Country World Index, excluding the U.S. And really, that's just the MSCI really provides a variety of market indexes for investment, and it'd sort of be similar to if you bought shares like in a Standard & Poor's 500 index. On page 2, then, I continue on that we're not aware of any of those international equity indexes currently that exist, which would exclude Russia. I believe that's changing and probably changing very rapidly. Of course, we've seen some media reports that several of those index providers, including that MSCI, are considering appropriate treatment of the Russian market. But given the lack of accessibility and investability in Russian securities, it's probably possible that the index more than likely will probably drop Russia from their indexes. In terms of the KPERS investments, though, so for 2 of our 3 international equity managers that own Russian equities, KPERS owns Russian securities through, it's called investments in a collective investment trust. So the system owns units of that collective investment trust as opposed to direct holdings of individual securities. So the trust buys things, and then we and other investors, large institutional investors, buy shares of that trust fund. And then, so then our 3rd international equity manager, there are some direct holdings in 2 Russian securities. One is an American depository receipt, and then one is a global depository receipt, both of which trade outside of Russia. I think one's in London, one's in New York. And we received communication from them, from that investment manager, that they are in the process of liquidating both those ADRs and GDRs, as they're called. As you just heard, and you may have seen in other places in the media, really, as a practical matter, any new investments in Russia, of course, are effectively halted at this time, and there's just no market liquidity. In fact, even the firm that is dealing with those ADRs and GDRs that we own, it's just so volatile. Like I think the other day, they said they were going to open up. They were open up for 2 hours, then they closed back down. And so it's really volatile, as you'd expect, in terms of being able to try to exit from those holdings. So anyway, lots of volatility, lots of uncertainty in those funds that we hold. Again, everything's pretty much locked up, so it'd be difficult probably to extricate many investors as well as the Capers investment. And just in terms of the trust fund investment decisions, just in terms of background, of course, currently that's all delegated to the authority of the Board of Trustees. And of course, so we have Capers investment staff with external investment consultants, which the board reviews all our investments on a regular basis at each board meeting. And of course, the board at their next meeting may decide whether or not they should, not make any new investments in Russia. Certainly, there's probably some discussion along that front. And of course, in all this, clearly, the Board of Trustees are fiduciaries of the trust fund, so that means they have the highest moral, legal, ethical responsibility to do what's best for the trust fund and hence the members. And there's even a statute, of course, that says the board is prohibited from investing or in reinvesting monies if the primary objective is for economic development or social purposes or objectives. So that's the current statute, but again, the board's examining the issue. Lots, of course, is happening on a daily basis in terms of the Russian stock market and the whole financial workings of the country. The process, should we divest from this, $35 million, and of course that was last Friday. I wouldn't be surprised if the value of that $35 million might be considerably less even today. If it could be, there could be the value of it determined somehow, but that's what it was last Friday. And of course, so there's no market liquidity at the point. So, of course, as we said, the Russian equity market's closed. And as you just heard, of course, the Russian brokers have been instructed not to accept trade orders from foreign investors, if or not, probably when the market reopens, whenever that comes. And so a number of the retirement systems, Russian investments in Russian equities are held, again, in those ADR and GDRs, which are kind of relatively illiquid at the moment, and of course, just have to see how that all plays out. Whenever the requirements of the trust fund to divest from a specific investment, of course, there's always some costs, they're called transaction costs or tracking error, but it just depends on if you're required to sell things maybe before you had anticipated selling them, and so there's can certainly be costs to the trust fund to do that. Should those sales be required, and of course then, in terms of the funding capers, less on the investment side means then the employer contributions then have to make it up. So that's shortfall on one side is made up then through higher employer contributions. So that's, I guess, just kind of some background on Russia. Mr. Chairman, glad to keep going to talk about environmental, or if you'd like me to pause at this moment.
Yes, that would be good to take a break and focus on the Russia side. So thank you, Director, for the overview. First question, Representative Riley.
Thank you, Mr. Chair. So a couple questions. The first one had to do with, it sounds like either the investment companies or the trust, the committee trustees are already got this under control, and so we don't need to worry that much about that. But the other ramification is, we're invested in the American economy, and our American economy that is trading of those cargo ships that's going back and forth that are being embargoed right now. That means trade, that means income to our factories. So there's some ramifications down the road. So that was wasn't a question, but a statement. Second is, I did ask your person that came with you,
The man
I don't
with
know
the
what
answers, planning and
man
research
with the
director.
answers, about what the ramification in the future would be as far as with China and where Capers was invested in China. So thank you.
Thank you, Mr. Chairman. Representative Riley, in China, we currently have about, or I guess as of last December, we had about $140 million invested in China, which would be about, it's 0.5% of the total assets. Russia was approximately 0.1%, China's 0.5%, and about 100 million of that 140 million is through the international equity market, and then we have then the balance, a little over 40 million on the fixed income side. So there's a $140 million, 0.5% of the total assets of the portfolio invested in China, if that's helpful.
Representative Proctor?
Thank you, Mr. Chair, and thank you, Mr. Director, for being here and laying this out for us. So I think what I heard you say is that, and I don't know if fiduciary responsibility is the right word, but maybe it is, the Board of Trustees really, because of their fiduciary responsibility to do what's best to keep the fund solvent and keep the fund thriving, really that compels them to be investing in these areas because these are areas of growth. Would that be accurate?
I believe so, and being a large institutional investor, so $26 billion, and if you had $26 billion, you probably wouldn't have it in a savings account or buried in your backyard. So they want to be well diversified, and so we have about a quarter in U.S. equities or stock, about a quarter in international equities or stock, and then a large part then in fixed income, mainly U.S. and then corporate debt, and then you get into timber and real estate and those alternative investments. So it's a well-diversified portfolio. So as the economy, either the U.S. economy or the world economy goes up and down, you know, maybe that fixed income side might do well. And so that's all part of their fiduciary responsibility to try to look at the long-term horizon and try to position the portfolio to manage, you know, to work through those ups and downs. But you're right, it all comes down to their fiduciary responsibility on what's best for the members.
So I think what we've just seen with this Russian investment, you could call it the logical conclusion or you could call it the worst case scenario, but either way, you see the pitfalls of investing in a regime that might not be acting in America's best interest, but might not be acting, frankly, in the world's best interest. Looking forward to that 100 million plus that's invested in China, you know, I'm concerned that the money's there, and God forbid they invade Taiwan tomorrow. We're in the same situation with another 100 million of Kansas taxpayer money. And so I think what I hear you saying, and I'd like you to confirm or deny this for me, is it would require a statute for us to prevent the Board of Trustees from investing in Russia or China.
That's correct.
Okay, thank you, Mr. Chair. Thank you.
Representative Osman.
Thank you, Mr. Chair. Part of my answer actually has been addressed based on the previous two representatives' questions. I just want to get clarification. You're saying that 25% of the approximately $26 billion is in foreign corporations, foreign companies, foreign stocks, and countries.
If I may, about 25%, a quarter is in international equity, so stocks around the world. So yes, on that. And then there might be some, then there's fixed income side, but of equities, what I probably most been think of stocks, a quarter of that would be in international equities.
Okay, thank you. And I share, I think, the same concern of the previous representative as well, that things could happen internationally that we're not necessarily prepared for, even just within Russia. As sanctions increase, as their assets get frozen, they start trading elsewhere. They're trading in Iran, they're trading in China, partially in Venezuela as well, because they need to get assets other places. If we ramp up our sanctions, and that includes other countries that are helping Russia, where does that leave us?
That's right, and a good question. And again, of course, we'd follow any of those U.S. sanctions, because clearly we'd have to comply comply with that, but that's right. Clearly, some of that is, I guess, it got bigger and bigger in terms of, the impact on the world economy. Certainly, that will ultimately impact that return on the Capers portfolio, since we have at least a quarter of it invested in U.S. equities. So if there's lots of upheaval, downturn there, that means probably those losses then would, work through to the Capers investment as well. I think it all comes, back to that, trying to have a well-diversified portfolio. So if the U.S. stock market's down, maybe the international equity is up, or maybe bonds are up. And it's all just, and again, we have that, or Capers has that 30 to 50-year time horizon, so there'll be lots of ups and downs. And so the portfolio is trying to be positioned to ride those ups and downs over a very long time horizon.
Further questions? So I'd have a couple as we go through. So I think there's a few layers to it. One is Russia specifically, and the other is, are there any other questions that we want to go into as we look to investing around the world, those risks, and how we prepare for the next step? As we look to the Russia holdings, we've got the index fund, which is remarkably difficult to change with any efficiency to unwind that. But it sounds like Morgan Stanley is actually pursuing a liquidation. Will they be keeping us posted on, is that in response to the sanctions specifically, return risk-based? And I'm guessing they, as an index fund, have a pretty broad set of holdings, so they would have a number of things that they would need to be unwinding. But again, as we bring that to our ability to affect that, that's a tough one as you hold an index. Now, indexing in our international portfolio is a remarkably small percentage, right? You index about 12% of the international portfolio?
That's correct, yes.
Whereas in the U.S., we index like 80 to 90?
It's a very large number, yes.
A larger, yeah. So the impact is smaller given that indexing is not as prevalent. Nonetheless, even though it's only 12% of the international portfolio, which is roughly 25% of the portfolio, it's the majority of our holdings in Russia versus the other holdings that we had. Is that correct? We had the ADRs and a couple of the direct holdings.
That's right. And then the other ones are in the index fund.
In the CIT. But so that one, we are somewhat captive to Morgan Stanley, or making a change from Morgan Stanley to attempt to find something that replicates the world index, which would probably be difficult. On the other end, we have our managers that were holding the ADRs and GDRs directly, and they are already in the process of liquidating those?
Yes, they are. They've informed us as soon as they can, but that's their intent, to liquidate those holdings.
So, again, even without direction to those managers acting in the best interest of the shareholders that they had, they are in the process of liquidating those holdings.
That's correct.
So we probably have a loss on that. Nonetheless, that is the direction that those are going. We then have the collective investment trust, and is that essentially kind of a fund of a series of folks that look to invest in that area? And do they own like one or two companies, or do they own a basket of those types of things?
My impression, I'd have to check, I thought it was the broader, it was like a basket of.
Okay. Do you know what the breakdown is between the index fund, the collective trust, and the ADR, GDR holdings? And again, somewhat of interest, but given that liquidity is gone and values are essentially zero, harder to come up with the next steps. But it sounds like in that collective investment trust, we might not have a specific next step at this point, where Morgan Stanley is currently looking at it and the active managers are looking at it. So what we do have there and any next steps that they would be taking would be of interest for us. So, Representative Berquist? What, are you sure? If you have a clarifying that's, has, Representative Berquist, I'm glad to have you ask yours.
Simple follow-up to the Morgan Stanley and the index fund is it almost impossible to picture unlacing those funds out of an index fund? And I think the chairman mentioned that they were still looking at ways that they can unlace that, but the way that they're interweaved, is it very difficult to picture actually catching our losses there and not just collapsing the pie to the extent you can separate Russian from other investments.
Yeah, I think you're right. I mean, I think it'd be very difficult to unwind it, those investments. And I think Morgan Stanley's and the other, these big fund managers, yeah, they're trying to see what they could carve out, to exclude Russia, to have an index fund of everything excluding Russia. But you're right, it's probably not something that would happen, overnight or on a dime kind of thing. It would take probably considerable effort to unwind that.
And just to follow up, and back to our fiduciaries within the state, they definitely can't control that. They can just only depend on those investment groups like Morgan Stanley to do what they can. And that's my last question.
I mean, the board could direct those fund managers when possible to withdraw or to divest or to sell those holdings. Of course, given the current market, that's probably not very possible currently.
Thank you, Alan. Thank you, Mr. Chair.
And thank you. And the board could direct active managers to divest. The index is the index by what they would be doing. So thank you, Representative Dodson, and then Neighbor.
Thanks, Mr. Chair. When we had the mortgage meltdown, we had Morgan Stanley, Merrill Lynch, on and on and on, who had to take advantage or try to take advantage of reinsurance like AIG. And AIG, as you remember, didn't have enough holdings to cover. So are those remedies available now, or is the loss maybe too small to consider right now?
I think from the Caper standpoint, and not that 35 million, or if it's worth 20 million, not that that's, that is real money, but it's probably too premature to think down those lines yet. And particularly since this is a world event or, a war that would be beyond, of course, the control or direction of those fund managers or investment firms.
Thank you. Representative Neighbor.
Thank you, Mr. Chairman. And this is a question just based on one of the former representatives' questions and comments. If we were to do a statute, would you suggest that it have a deadline on it? Because the issue here that I see is we don't know where this is going yet. Every day is a new day. There may be more discussions. We don't know how far the sanctions are going to go. They may reach an agreement in a couple of months. It could be longer, but not knowing, but arbitrarily setting statutes in place that say you can't do this to the board and you can't buy here from like Russia and China. Does that hamstring the board then if we don't put a final date on it and we don't allow them to do their job? I understand the statute part, but I think we're kind of in a quandary right now because we don't know what's going to work and what isn't going to work.
If I may, Mr. Chairman, you're right. I guess if there was some end date in it, then that would trigger, I guess, probably an evaluation at some point down the road, whether it's 1 year or 3 years or whatever, then to require, I mean, I'm sure the board could report on what's happened, and the legislature at that point could consider whether or not to extend it or just let it, in effect, sunset. I guess in all the investment, the more sort of exceptions or requirements that the fund managers can't do, then that does, increase their cost, because then they have to carve that out. And in this case, of course, it's pretty, apparent, but in other things, that can be challenging. So.
Thank you, and thank you, Mr. Chairman.
Thanks for the questions. Continuing along the lines that are there, as we look at the risk, so CAPER's equity portfolio is split about evenly between U.S. and international holdings. And it also, at a 26 billion portfolio with some volatility still somewhere around there. But you don't change that on a dime like a battleship or a carrier. How do you get from where we are to where we want to be? But in light of the risks that may be present in the international world versus here, is that one of the things that can be revisited? And how far from our strategic mix do we dare to go with a tactical mix? How quickly can those types of things be implemented, with the indexing portion being our biggest exposure to Russia and China? Recognizing we have concerns there, it would seem if we brought down our overall allocation internationally, including that indexing part, to continue to seek active managers where we can find our way away from some of those areas. Are those discussions that are likely to come up in the 24th meeting? Are those discussions that our input is helpful? And to the previous representative questions, we're going to try and figure out the best thing to do together, right? How do we make sure we meet the needs of the fiduciary for return for our CAPERS investments and holders? And how are we good stewards of deploying assets in a manner consistent that we would want to do both for Kansas and the United States? So back to trying to turn that ship going forward and looking out for the next problem.
Right, and you're right, the Board of Trustees will meet later this month. They're going to hear from their investment consultant, probably hear from some of their fund managers, and probably get some update in terms of what's going on with the economy and the situation with Russia at that point. They will also, they do, every year they do an asset liability study, and so they decide those baskets, and give then direction to the fund managers, how much in equities, how much in fixed income, how much in timber, and on down the list. So they monitor that. They have a multi-year plan on that, and every year then they look at it to see whether or not that needs to be fine-tuned or not. So the board certainly, I'm sure, would, if you all have suggestions, thoughts, concerns, you're the ultimate plan sponsors in terms of the IRS. The Kansas Legislature is the plan sponsors of the retirement system. So it ultimately falls to you. Trustees have that fiduciary responsibility, and then the operational thing to carry that out. So if you have thoughts, input, suggestions, I'm sure the board would welcome that.
Thank you, and I think exploring where that is needed is useful to give the guidance that is there, as well as how the hamstring word is one to consider. We don't want something that has a longer life than what is needed in making that and welcoming healthy trading partnerships around the world, but managing those risks and making sure we're there. The good news, it's probably bad news, is the liquidity in the market has actually already forced that, but the managers in most of the cases with Morgan Stanley and those holding the ADRs and GDRs directly are already in process of liquidating that when that possibility is there. In the case of Russia, need for direction on new investments. Is that something that goes without saying? Is that something that we need to take action on to make sure that that clearly happens, and how might we, any sense to that?
Thank you. I'm sure the trustees, I know we've received lots of concern from members and from other people around the state in terms of the holdings that we might have in Russia. So I know the trustees are very aware of it. And again, I believe there'll be some consideration of it at their March meeting.
Thank you. At this point, committee, I think I'll ask the director to hold on the ESG topic, and maybe we'll take that up on Monday. And the Russia one being a bit more timely, I had wanted to make sure we knew where we were on that one and move to our bill hearings at this point. Thank you, Director. All right. Our first, I think we will move to Senate Bill 335. For, I think, the majority of our folks in the gallery. We will open the hearing on that and ask for an overview from the reviser.
Thank you, Mr. Chair and members of the committee. Senate Bill 335 exempts certain business entities that provide health insurance in the state but are not subject to the jurisdiction of the Commissioner of Insurance from the payment of their annual premium tax. So Senate Bill 335 amends KSA 40-2222B. The bill was passed by the Senate Committee of the Whole on February 17th and referred to this committee again on February 17th. The bill creates an exception from payment of the annual premium tax for business entities described in 40-2222 that provide coverage in the state for medical, surgical, chiropractic, physical therapy, speech pathology, audiology, professional mental health, dental, hospital, or optometric expenses through self-funded healthcare insurance. And with that, Mr. Chair, I can stand for questions.
Thank you. Committee questions for the reviser? Seeing none, thank you for the overview. So, and I should have done my homework on this. Is there a fiscal note that was presented with the bill? Would research review that for us?
Thank you, Mr. Chairman. As Eileen mentioned, there are certain health plans that are outside the jurisdiction of the insurance commissioner. Full health plans, accident and health plans, are subject to a 2% premium tax. These entities, as Eileen mentioned, are subject to the 1.0% premium tax. They pay that annually to the general fund on May 1st of each year, and 100% of that amount is currently transferred to the state general fund. So with the removal of these entities being subject to the premium tax, their current tax owed for tax year 2022, which is due May 1st, 2023, is just over $1.02 million. So this will be reflected as a revenue decrease to the general fund for fiscal year 2023.
Thank you. Are there questions on the fiscal note? Seeing none, we will move. Oh, Representative Riley.
I think I know the answer to this, but could research let us know how many of these companies there are?
I believe you will hear from the two largest associations or business entities. There is a list of 9 of these entities that would be subject. Is that correct, Eileen? 8 or 9? But there's 2 that are the largest ones, and they'll be speaking to the group, and they have the lion's share.
All right, thank you. So there is 9, but 2 are highly invested in this program. So thank you.
Thank you, Mr. Chair. Of the 9, the majority are either defunct or no longer offer that health insurance plan. So the 2 are probably the 2, I would guess.
Okay, that clarifies that. Thank you.
Thank you. Other questions? Seeing none, we will welcome our first proponent to the committee, Alex Orrell, Senior Vice President, Government Relations, Kansas Bankers Association.
Good afternoon, committee. Thank you for having me. For the record, I am Alex Orrell, Senior Vice President, Government Relations for the Kansas Bankers Association. I am appearing on behalf of the association, and since I don't have the opportunity to be before this committee very often, I will take the opportunity to explain who the KBA is. KBA was founded in 1887. We're one of the oldest state banking associations in the country. We're either the 4th or the 5th. oldest. We have that argument with Texas, and you know Texas likes to be first, so we'll just let them, we'll say fourth or fifth. I also have with me on staff today Elizabeth Roche, who is our Senior Vice President of Employee Benefits Administration, and then Kelly Van Zwol had to step out of the office. Oh, she's back. She had to drop off testimony for another bill for tomorrow that she's testifying on. We appreciate the opportunity to be here to testify on Senate Bill 335, which would help keep the cost of health insurance as low as possible for association health plans like ours that are regulated by the U.S. Department of Labor and under the jurisdiction of the Employee Retirement Income Security Act in 1974. Kansas Bankers Association, like I said, was founded in 1887. We represent 99% of the Kansas banks operating here in Kansas that employ more than 22,000 Kansans that provide financial services in every single county of our state, and it's an honor to represent him here today. You might not necessarily think when you see the KBA that you think insurance, but we are heavily interested in insurance. In 1900, the Kansas Bankers Association, at the direction of our membership, we are a member-driven organization, directed us to start providing insurance products. And we've been providing insurance products since 1900. Property and casualty, bond, director, officer liability, recently cybersecurity, unfortunately. That has been a huge demand recently. And in 1940, at the direction of our members, we embarked on a new service, health insurance. And today, that plan has grown to the second largest group health plan with Blue Cross Blue Shield in the state, behind the state itself. And we insure over 12,000 Kansans and their dependents, or 12,000 Kansas bankers and their dependents at 175 banks within our membership, totaling over $64 million in premiums a year. It's a very robust plan. Since we are federally regulated under the U.S. Department of Labor and ERISA, there is strict regulation and strict scrutiny. We take that very seriously, and because of that, there is a separate board of directors that governs our health plan that is different than the KBA board of directors. The KBA board of directors cannot tell the board of directors of the health plan what to do. The reason being is they have a fiduciary responsibility to do what's in the best interest of the plan, not what's in the best interest of the association, and not what's in the best interest of the bank that they represent, in the best interest of the 12,000 lives they represent and insure. We were recently audited by the U.S. Department of Labor in 2019, and those that have gone through that process know that it is an extreme process. And I am pleased to report that we did pass that audit with no further action needed by the U.S. Department of Labor. Very proud to report that. This plan, this proposal before you today would exempt our plan from the state level 1% tax. We are asking for that exemption because there is no oversight at the state level. There is no regulation at the state level, and I'm not saying that to say the state can't do anything to our plan. I'm not trying to be like that about the plan, but it's because we are under the jurisdiction of the U.S. Department of Labor and ERISA. And for our tax bill last year, it was $630,000. That's a major tax for zero services. You will see in my testimony, there's an attachment. There's a form that I attached to my testimony. This is the extent of our relationship with the state. We tell them the amount of annual gross premiums, we tell them the amount of expenditures, we tell them our taxable premiums, and we tell them the tax due. And we write the check, and we send that check to the state once a year. And then that money is, we sent that to the Kansas Insurance Department, and then that is 100% swept into the state general fund. That is the extent of that relationship. Other ERISA plans that are not association health plans are not subject to this 1% tax. You're probably wondering who some of those other groups are. Blue Cross Blue Shield, employer health plan. Mize-Hauser, employer health plan. Shawnee County, employer health plan. Topeka, employer health plan. Those are other employer ERISA health plans that are not subject to this 1% tax. And that's publicly available information. It's called a Form 5500, where you can find that information online. So what we're asking for is parity here, and also allowing us to do what's best in the best interest of the 12,000 lives we're responsible. As this committee knows, keeping health insurance costs down is a significant issue for everyone, And health insurance, unfortunately, is not going down, it's going up. We see this 1% premium tax as an unnecessary barrier for us trying to do that exact thing for the 12,000 lives we represent. We appreciate this committee's time. Appreciate you looking at this bill. I will make one final comment. It did pass the Senate 34-0. And I don't believe there's any opponents here today. The reason why it wasn't 40, it was during the snowstorm vote. I do believe it would have been a stronger vote on the Senate. Those 6 were absent because of the snowstorm. But I appreciate this committee's time, Mr. Chairman, and I would be willing to stand for questions at the appropriate time.
So thank you. We may continue with proponent testimony and then go to questions. So thank you for your testimony. And with that, Ms. Stafford, if you would join us from the Kansas Cooperative Council. Welcome to committee.
Thank you, Mr. Chairman. Shahira Stafford, I'm here representing the Kansas Cooperative Council. And because I haven't been before this committee before, I will say that the Kansas Cooperative Council represents all cooperatively structured businesses in Kansas. However, the majority of our members are ag retail co-ops, and so that's why this bill is important to us today. Many of our ag retail co-ops are members of the Agribusiness Benefit Group Plan. It's a 501c9 employee benefit trust. It is also regulated under the U.S. Department of Labor. It is an ERISA plan. And ABBGI was formed in 1983. Today, we provide prescription drug coverage, an HSA-compliant plan option, optional dental coverage to 65 farmer-owned cooperatives. Our plan covers 6,000 cooperative employees and their dependents. Most of the ag retail co-ops that are members of ABBGI cover their employee benefits at 100%. And the ones that don't cover those plans for their employees at a very large percentage. To be able to continue to do that, we see this 1% savings as a way to pass down to our employees and make sure that we can continue to provide health care to them and their families. I do want to thank the Kansas Bankers Association for bringing this plan to our attention over the summer. Thank you for drafting this bill. And again, the Agribusiness Benefit Plan paid $280,000 in 2022, or in 2020, excuse me. And so I won't go over most of what Alex already mentioned, but we do agree that this is a federally regulated plan with zero oversight from the state of Kansas. And so we would respectfully ask that you consider this bill. And I'd be happy to stand for questions.
Great. Thank you for your testimony. I don't believe we have other proponents on 335. Seeing none, we will move to questions. Committee, any questions? So, Mr. Oral, I might just ask, going through, and I think the parity argument is a strong one, but how did we come up with a 1% that went to SGF in the, any ideas on where that came from, how that landed, and
the tax does predate me at the KBA, but it is my understanding that this tax was implemented back in 2014. Kind of got to go back to 2014 of what was going on in this legislature. We were reducing corporate income and raising taxes and fees on other things. This tax was implemented in 2014 on association health plans. As all association health plans, there's the 9. I do have a list in my bag for those that want them. You know, I do believe there was probably a thought there that the intent was for regulation and oversight by the Kansas Insurance Department. If you're going to be regulated by them and there's oversight, you should pay a fee for that. And I think that was the intent. And there are plans that are still going to be subject to this 1% tax, but they are regulated by the Kansas Insurance Department. So the intent was probably there, but for our plans like ours, that is not the case.
Representative Berquist.
Thank you, Mr. Chair. Just one question. It may be rhetorical, but how many pages of reports do they have to process at the state level for your tax statement for the year?
It is my understanding it is this form, but I'd have to check with the insurance department in the state. But this is all that we do.
Okay. Looks pretty complicated. Thank you.
Further questions? So I was just trying to process through each of those things. The other premium taxes that are collected, if we look at our total revenue stream, are all of those related to the oversight, or are premium taxes and insurance? And I don't know, maybe I'd have to look to the revisor or research to get a handle on what other premium taxes are there.
Regarding the other insurance companies, I can't speak to their tax structure. Right. I will make one final comment about our plan too. This is a captive insurance plan. You do have to be a member of the association or an employee of the bank. So I want to make that clear too. I think that is a very key piece of this. It's not open. You have to be a member and employee.
So, thank you. Representative Riley.
Thank you, Mr. Chair. Just for history of this, all of these premium percentages and everything came up when we had a discussion 3 or 4 years ago with the discussion between the banks and the credit unions kind of thing came up. And so this has been going on for a while, and like I say, no services, no fee. So,
further questions? Seeing none, thank you for your testimony to both of you and for being with committee and bringing it to our attention.
Thank you, Mr. Chairman, and thank you for allowing us to be here for the beginning part of the hearing today too. That was very informative.
Thank you for letting us change that up based on our WebEx conferee. That was not the original intent, but I appreciate your patience.
Oh, no, with everything that's going on, it's critically important. So thank you.
So thank you. Believe we have no other proponents for 335. Is there anyone wishing to appear? Well, if you have a question on the topic, yes. Okay.
and again, I'll let you finish with what you're saying. And I just have a question whether or not, I know we don't have a snowstorm coming or anything this week, but, you know, I would be open to moving this. This is a very simple bill, moving it out to the floor. So, you know, when that time comes, let me know. Thank you.
So thank you. And we'll continue through the rest of the hearing, and once we'll close this one, and we'll do the next hearing, and then if the committee wishes to take some action at the next step, that I appreciate you bringing up that possibility. Is there anyone wishing to appear as an opponent? Is there anyone neutral? And anyone else at all? And we were essentially done representing, but thanks for letting me finish the steps. But with no further testimony, we will close the hearing on Senate Bill 335, and thanks to everyone for that. The next item I would take up is the hearing on Senate Bill 331, and then after that, if we want to work one or two of those bills, we certainly can consider that on where the committee is. But with 331, if the revisor would give us an overview, and this one will be tough.
Thank you, Mr. Chair and members of the committee. Just for your information, we did the House companion bill of this in Senate FI and I today. So this is my very exciting day to do the most exciting bill ever, twice in one day. So Senate Bill 331 updates the version of risk-based capital instructions in effect. Senate Bill 331 is the Senate version of our House Bill 2564. The bill was passed unanimously by the Committee of the Whole on February 15th of this year and referred to this committee on the 16th. So as you all recall, the insurers are required to file their risk-based capital reports with the commissioner, and the version of the instructions that the insurers need to use changes every year. So we update it with the following year in statute. So you can see the amendment on the bill in page 2, line 2. We're just changing 2020 to 2021. And I can stand for questions.
So thank you. Could you go through the definition of risk-based capital again? Oh, just kidding. Committee questions.
Risk-based capital is the amount of capital that an insurer needs to cover their obligations.
Thanks for giving a short answer. Representative Proctor.
Mr. Chair, I'd ask that the revisor not give that explanation because I think I finally understand it after 2 years on this committee. Thank you.
Representative Riley.
Yes, Mr. Chair. When we come to the point as far as like to work this. I know that Eileen will hate my conceptual idea on that, but I do have an idea of one amendment to this whenever you get to it.
So thank you. Thank you. So we will have our proponent testimony, but any other questions for the reviser? Representative Neighbor.
Thank you for that in-depth piece on the bill. Didn't we, for my memory, didn't we pass this and then put it on consent calendar? Is this the one, the House bill, the 25? Thank you. It's just more of a reminder to all of us that.
Further questions?
And just if I can point something out, I do know that the Senate is planning to amend the House version of this bill as well. So we need to be careful that the amendments don't cross each other and end up the same and not bring the bill into conference, potentially.
So, so we may talk about that just a little further in a moment. So thank you. Sure. With that, thank you for the overview. We'll jump straight into our proponent testimony and welcome back to committee Mr. Modisett, Director of Government Affairs and Communication for Kansas Department of Insurance. Welcome back to committee.
Thank you, Mr. Chairman. I always feel odd being obligated to stand up on this simple bill, but I do want to note for the record that Mandy filled in for me last time, and she said that you all tried to work the bill before she even got up here. So I know that obviously she's far better at this than I, if you were trying to beat her to the punch. So I'm here if there are questions, but thank you for your time.
Thank you, and thank you for bringing the bill to us. Are there questions for Mr. Modisett or the Insurance Department? So are you terribly concerned on whether it's implemented on publication in the statute book or in the register?
That's up to the body.
Thank you. Thank you. Is there anyone else wishing to appear as a proponent for Senate Bill 331? Anyone neutral? Any opponents? Anyone else at all on Senate Bill 331? And seeing none, we will close the hearing. Oh, wait. Before I close the hearing?
I had a question. I
Representative
would
Miller.
like to ask Representative Proctor his understanding of risk-based capital.
See, that's the danger right there, buddy.
Mr. Chair, I'd prefer not to explain it because I might lose the slight grip that I have on the concept if I try to speak it out loud.
And if I heard the representative correctly, he has respected the desire you have had that the chair would ever end on time. And in the risk of failing that, he did not wish to give you a full explanation.
No, I knew it wouldn't take him long. Thank you.
Oh, Representative, you may respond.
I have no response.
Anyway, okay. Well, thanks, actually, committee, for having fun. I appreciate that part of it. So we have closed the hearing on Senate Bill 331. Is there a desire to work 331 and suspend the rules to move forward? Representative Riley.
Yes, Mr. Chair, I would make a motion that we suspend the rules and work Senate Bill 331.
Seconded by Representative Neighbor. Is there discussion? Representative Neighbor?
The only reason that I went ahead and seconded this is it has been before us before in this language, and we passed it out unanimously, and we put it on the consent calendar. So I don't think I'd put it on the consent calendar, but we can certainly pass it out, and this is a yearly event. So if you're on insurance in the future, every year you get to see this same bill. So just be aware, because I know Eileen takes a long time with this, and it's tough. So thank you. Celebration.
Thank you. Further discussion, committee? Representative Riley?
Yes, since I don't trust the Senate, I have a conceptual amendment. She doesn't like this, I'm sure.
Yeah, so the first vote would be we'll close the motion to proceed on this bill.
All right.
Which I think was to suspend the rules, right? So assuming we're at that point, if there's no further discussion on the motion to suspend the rules and work the bill, Representative, you may close on that motion.
Thank you, Mr. Chair. I close on my motion.
Heard the motion by Representative Riley to suspend the rules. All those in favor signify by saying aye. Aye. Opposed, no. Ayes appear to have it. Ayes do have it. To that end, I might ask if our reviser could give us any guidance on what issues you were speaking of in terms of amending a bill that may cross and wind up being the same bill and create an issue.
Right, thank you, Mr. Chair. So if this committee were to maybe change an effective date hypothetically and amend the bill that way, pass it out, and it crossed over to the Senate, and the Senate planned to amend the effective date to bring the bill into conference, and it passed over the Senate floor, you would have the identical bill, which would not go into conference. Additionally, if there were any plans to, anyways, so I would recommend that only one committee plan on amending the bill. I know the Senate heard it this morning and had planned to do so, but if, you know, in your wisdom, Mr. Chair, if you wanted to get with the other chairman and decide who wanted to amend which of the duplicate bills that we have crossing, it might be an idea.
So has the Senate yet worked this bill? So Representative Miller.
Thank you, Mr. Chairman. What the reviser didn't say, but what I think she's trying to say, without saying it, is we want to have a shell to work with in conference. And you might explain that a little bit for the new members. Maybe I'm wrong.
Mr. Chairman, yeah, I mean, you know, each bill, if the exact language of has to pass, you know, both the House and the Senate in each bill. So you could amend the Senate version and put in, you know, change the effective date to register, and the Senate committee could amend the House bill and do that same thing, and pass it across the floor. But now, you know, each of those bills could then be conferenceable. So you could have two shells. I mean, they would have the same, you'd have to pick just which one you want to have with the proper effective. You just don't want to pass both of them out, you know, that would be the only thing. But you could have both bills in conference with that amendment.
So both bills could go into conference with the same amendment of the effective date, and then we could choose whichever we wish to proceed with at that point. So it doesn't necessarily preclude us if we make that change. So yeah. It is all Greek. So one thing, and to Representative Miller's point, as we work to have, on our more complicated bills, we might be more interested in advancing them precisely as we would want to get the process finished. On one that is simpler, it provides some flexibility to deal with other issues that come up by having that completed shell that makes it to conference by passing both of the chambers. So other things besides the effective date might be something that we could look at in this bill. I don't know if there are other similar things that we would dare to word differently than the effective date. But if we are back to agreeing that both of committees could change the effective date and both bills would wind up in conference, I think that gets us to a possible solution should we wish to pursue that. So thanks for that fun discussion. That is great. But Representative Riley.
Mr. Chair, I do understand that concept, seeing this going back and forth for 4 years. My change would simply change, to be reviser friendly. I would strike the words after effective on, I would strike December 31st, 2020, period. Change that to effective on the last day of the previous year, period. I hate seeing this again and again and again.
So I'll let the revisers think through that in that it has a couple of other implications, which we can all debate as well. And one of the changes that we can talk about whether we want to have the simple bill, which sometimes isn't a simple bill every year, or if we have a route to go. So was that a motion? Well, let's see. First, it would be to pass Senate Bill 331 favorably. And gotcha. Okay. Yes.
Okay, so thank you, Mr. Chair. If we changed the language to say that if in effect on the last day of the previous year, then in essence, what we're doing is we're never going to amend the statute again, which brings us back to the unconstitutional delegation of authority that the NAIC would have, because their body would be adopting a set of instructions, and by us saying whatever is in effect on the last day of the previous year, whether it's 2002 or 2022, they still are adopting guidance that the state would need to use, and hence would have that unconstitutional delegation of authority. I would recommend we change the effective date because it is just cleaner. Thank you.